Welcome back to my mentorship series. I hope you guys have been enjoying it so far. We are 10 episodes in. This is episode 11, and as you can see, today we're going over trends, using IFVGs in trending markets, right? And establishing, what is a retracement versus a reversal? When can we decide that a trend is in play? And how do we join a trend, right? We never really want to be buying the top. We don't want to be chasing longs in a bullish market. And we don't want to be selling the bottom in a bearish market, right? Although, if we have a draw that is further, it can pay off. You're not allowing price to retrace, and you're risking getting stopped out on a retracement, right? Because a healthy market needs to breathe. It needs to retrace before continuing lower. So we're going to be going over a few things, waiting for opposing FVGs to form, right? Understanding the difference between that being a reversal versus just a manipulation move, and then entering when price has confirmed that the original trend is going to resume. So what is a trend? Let's start there. This sounds like a rudimentary question, but it is one worth answering, right? A trend to me is not necessarily a first reversal attempt, but displacement and confirmation of new PD arrays being respected. Once we start establishing bullish FVGs, let's say after a sell-off, and we respect these bullish FVGs and we're invalidating bearish FVGs, this is telling me that order flow is bullish, right? Longs are playing out, shorts are being continually stopped out. This is a sign of a bullish trend beginning. Vice versa, for a short trend to establish, I'm seeing bullish PD arrays getting disrespected, and I'm seeing bearish PD arrays being respected in the market. So this can be order blocks, this can be FVGs, breakers, rejection blocks, any of that stuff. Once price is not paying any respect to, let's say, a fresh bullish FVG, but instead we are rejecting freshly formed bearish FVGs, and price has swept liquidity. That's the main thing here. Anytime we've reached our objective, right? So let's say we had previous day high back here, we swept that. Now I know that longs have had their terminus engaged, as ICT would call it. We have ended that move, and reversal is more likely because our draw has been swept. This is when I begin to look for a new trend to establish. So point number 2 here, why not just FVG retracements, right? Why not the 2022 ICT model? Let me show you why FVG retracements are not precise and why they can cost you unnecessary stop-outs. So let's say we're in a trending market. We get this MSS, right? Market structure shift. We form a bearish FVG, price taps it. If you're entering short here, when price looks like this, right? We're coming back up so you can get your retracement entry fill. This is a very high risk position to be taking because you're shorting into strength. This market has been trending up. You've just seen a bearish FVG form and you want to short a retracement of that bearish FVG. This sounds good in theory, and if you're really precise, it can work out. However, you don't know what sort of reaction price is going to have at this newly formed FVG. Okay, so the difference between FVG retracements versus IFVG confirmation and closure is just that, right? Retracement entries, not knowing what sort of reaction you're going to get when you're trading those FVGs, versus confirmation with closure when you're trading IFVGs. My system would not tell me to short here. Instead, I'd be looking for this. So instead of shorting here, I'm looking for price to form a bullish FVG, to manipulate, to stop out early shorts, perhaps sweep highs once more, and then get an inversion of that FVG. More than likely, people who were shorting that initial FVG retracement have gotten stopped out. Price has manipulated, like I said, with that bullish FVG, and if we get that closure below, that is my confirmation to sell short. Notice the difference here. I'm shorting as price is coming back down after manipulation versus shorting as price is resuming that original trend because you just see that FVG retracement. All right, let's look at an example here. We have relative highs in the market, plenty of highs above. We have our New York opening high right here. And we're starting to see a bit of a reversal, right? So is this the beginning of a bullish trend? Well, just like I said, let's analyze what PD arrays are being respected and what are being disrespected. So I immediately see that a couple of bearish FVGs have been closed above. This one right here and this one up here. This is likely that a reversal is occurring. I'm also seeing a bullish FVG form in the market right here. So if I'm looking for longs, if I think the market is going to begin distributing to all of these highs up above, what I need to look for now are retracements, bearish FVGs to form, and then a closure above those. If we fast forward a bit, we see price come back and tap this bullish FVG. Now, if we're right in theory about this being a reversal and a long trend establishing, this bullish FVG should hold. Okay, now this is when I'm really paying attention. We've respected our bullish FVG and we've closed above down close candles. If you guys know about order blocks are counter trend candles that are followed by in-trend displacement. So here's our original trend. We have counter trend candles forming here. This becomes our order block. We respect this bullish FVG, and then we get this closure above that order block. This is now bullish order flow. On this candle close as well, we also close above this small bearish FVG here. This is my IFVG confirmation, along with these bullish factors that a trend to the upside has formed and I should be going long. So let's buy this close, target those highs, and place our stop at this displacement candle low. As you can see, we start to distribute up. Now we have a bearish FVG here, but we also have relative highs. So I'm going to trust the process. We've also formed another bullish FVG here, and price has tapped and again respected that. So I might be seeing more bullish order blocks forming. We saw price give 2 down close candles here, respect a bullish FVG. I think that's what's going on here. Let's see. Okay. And there we go. There are those highs taken, and that is our bullish trend that we came to expect. Why did we anticipate this? Well, bearish FVGs were being disrespected, bullish FVGs were holding, bullish order blocks were forming, and we got that inversion confirmation right there. This is how you capitalize on trends using IFVGs. Let's take a look at some more examples. All right, now let's take a look at some examples to the downside. It's clear to see that we've established a bearish trend. The market is selling off, so no need to anticipate any sort of reversal. We are already selling off, and we do have sell-side liquidity on higher timeframes below to target. How can we get short? Well, again, let's compare those FVG retracements to IFVGs. If someone had marked out this FVG and they had said, let me sell on a retracement to this, what would happen? Well, you'd put your stop at this displacement candle high, you would target this recent low, you'd be filled on this candle here, and almost instantaneously, you would be stopped out. This is the problem with FVG retracements. You have no idea what sort of reaction could occur here. Price just flew straight through it, and this was an instant stop out. The solution to this instead is to wait for bullish FVGs to form, which we got on this same candle that stopped out early shorts. So although it's small, we do have a bullish FVG that formed here in the market, right? It's about 2 or 3 ticks big. This is still valid. It is manipulation, so I'm going to mark it out. My trigger to go short will be a close below. Why is that? Well, we've retraced, we've stopped out shorts with tight stops, and we have respected this bearish order block here in the market. So bearish PD arrays are holding. I just need to see this bullish PD array disrespected with that inversion, and I will go short. Okay, we are wicking above that order block, but the body's still holding. We're not closing above it, so good sign for our short. We come down, we tap into that bullish FVG, but no close below just yet. And finally, a close below on this candle here. This is confirmation that this was just a retracement, our bearish order block held, and our bullish FVG was inversed. Let's sell this. So selling this close, I'm placing my stop halfway through this bearish order block that has been validated, right, with that in-trend displacement. This should hold. Again, I'm anticipating bearish PD arrays to hold. All we have to do now is target our recent low and see how the trade plays out. And in one candle, we got that exit, right? This was our target. Price went well below that. Obviously, I'm in replay mode, so it's not giving me my exact fills, but you see my point here, right? Now, as a scalper, I'm always getting in and out at recent lows and highs, but that doesn't mean I'm missing out on too much. These retracements occur multiple times throughout a strong trend, so all that we have to do now to capitalize on more shorts is wait for another bullish FVG to form, assuming context remains. Here's another example of bearish FVGs not serving as strong entries. If someone took a limit order here to go short, they would have been stopped out, right? This is the problem, and you see once again we have formed a bullish FVG. So if we get a closure below, let's short. Price has come back down into this fresh bullish FVG. We are rejecting this bearish FVG up top, and we get our close below on this candle here. Selling this close will target our session low. I'm going to put my stop halfway through this freshly formed bearish FVG, and that is where I'm going to take profit. Again, guys, when we're forming bullish FVGs in strong bearish trends, this is just manipulation, and closure below is that confirmation you need. Another example here to the upside, we have a clear bullish trend. Market is trending upward. We have a bearish FVG present here. We also do have a volume imbalance up above, so I'm going to wait for closure above this volume imbalance to go long. I'm seeing the market retrace. I'm seeing this small bullish order block hold, so we should continue higher. I just need that confirmation. Here I have my full inversion with a close above that volume imbalance. So for a quick scalp, I'm going to set my stop at this displacement candle low, target our recent high, and be out right there. Inversions are literally the market telling us that this PD array isn't valid. Bearish order flow was not strong enough to hold price down. We got our close above. This overwhelming trend is still valid, and we make new highs. One more example here, we can see that the market has clearly reversed from this uptrend. We are now selling off and we are respecting bearish PD arrays. We're forming bearish order blocks like we see here, and price is presently in a bearish FVG. You guys know what I'm looking for now. I'm looking for a bullish FVG to form and then an inversion of that. Here is our bullish FVG and there is our inversion. These small retracements are often matched with inversions because that's all they are. They're just price breathing, letting people scale out of their positions and then resuming the trend. I'm going to mark out the fact that we have relative lows here, sell this close, target those lows, and place my stop at CE of this bearish FVG. And in one candle, we are out. So as you can see, I'm never selling the bottom here. I'm waiting for price to breathe and I'm getting in when it tells me to. So in summary, let's review the 3 ways that people would be catching long. So you're either buying the top, which has the least amount of confirmation and the most risk because price can come right back down anytime and stop you out. Or you're buying FVG retracements, which is okay, but you don't know what sort of reaction is going to occur at that FVG if price just wants to keep going through it. Or you trade my model and you buy inversions. We allow price to form a high, right? We're not buying the top, but we let it form a high. We let it retrace, and then we get our confirmation of the original trend with that inversion. This is the safest and highest win rate model to capitalize on a bullish trend. Once more, vice versa, you're either selling the bottom, not letting price retrace, very high chance of getting stopped out. You're selling FVG retracements, you don't know what sort of reaction could occur, or you're taking the IFVG closure and you're selling that confirmation, right? You let price retrace, you let it reject some sort of bearish PD array, showing that that trend is still valid, and you're getting your real confirmation. Guys, this has been episode 11, all about trends. Last episode, episode 10, was about reversals. I hope you guys can use these in conjunction to trade any sort of market, right? Trending or ranging with reversals. This should give you the confidence you need. This has been episode 11. If you're enjoying the series, leave a like, share it with someone you think it would help, and keep an eye out for episode 12.